Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Thursday, May 16th, 2019. I'm giving you guys a bunch of them this week because we're heading into some interesting times. So let's get started. Our predictive analytics model, we're looking for a black hole or a kill zone, and typically these are the types of moves that happen, and that's one of the reasons why we're doing our the 100-point guarantee is we're confident when these moves are about to happen. We don't make this offer too often, but when we do, we've pretty much been right each time. So right now, the predictive analytics model, we're neutral, and bearish. So time-wise, we still have a little time before we get into the kill zone. Sentiment, we hit 1% sentiment reading on the short term, and technicals, we're open-minded, and I'll show you what is going on with it. So from a short term, just looking at the barometer of where sentiment is, we are at the euphoria. That was at the top. Everybody was looking higher. Nobody saw a reason why this market was ever going to go down. And just like every cycle that happens, they got washed out into capitulation. We got a 1% bullish reading. Now we have a rally coming off of that, and people are starting to get a little more, feel a little more safe about the market. But on an intermediate term, we're still here, and we're going to get into the euphoria when we hit into the kill zone, and most likely we're going to get another series of extreme bullish sentiment readings. But you can see everybody was bullish here. Even people were bullish when we had the drop and we had that big up midday. They got 95%, 91% bullish as the price was lower. And you can also see sentiment-wise, we were diverging here as price was going up. So this is a type of indicator that nobody else that I know of can even have, because nobody tracks sentiment like like Woody does. So we're really the only one that has this type of indicator, and you can see that sentiment was diverging as price was kind of just going sideways. People were bullish on this market when the market was going nowhere. And from there, everybody got washed out with the 1% that marked the actual low. And that's when we covered our shorts. And we left 1/3 of the position open just in case we continue down. But 2/3 of it was closed at 28.10. And it was a good trade because the entry was from the 29.42 level. So we have, like I said, some serious volatility that's going to be approaching, and you have to really know what is going to be going on and know what to expect, because most people are going to be getting long at the exact wrong times, and they're going to capitulate at the exact wrong times. So real quick before I go into the charts, most likely this will be the last call for the 100-point guarantee. If our market calls do not equal 100 S&P points in 90 days, you can ask for your money back, and that's it. Now you can take advantage of either one of these. You can do the $299 for 90 days, or you can do the 12 months for $1,200 and still ask for your money back, but that's only within a 90-day time period. And most likely you're going to like what you see and the money that you make on the trades, because if it turns into a black hole, then we're going to see 200-300 points on the downside in a very fast manner. So if you just did some small put option on the SPY, or did any of the double or triple inverse ETFs, then again you can make a ton of money, and you're probably not going to be looking for your money back, and you could take advantage of the 12 months and save yourself $600. So let's go to this chart here. Now this is something that I put in a trader view. If you guys are not following me, do it, because I post a few charts a day, and it's actually some pretty good information that you get, and you get it delivered right to your inbox. But this was the 1% bullish reading. When we came up, we did come back and close the gap, but look at what I was pointing out when we were down here. It was a possible inverted head and shoulders pattern. Now this is when price was here, and if you go and take a look at the date, this was posted on the 15th, so that was yesterday. And right now, this is what's playing out. If we go and take a look at what's happening with the charts right now, we went through that little the tilted resistance line here, which I left the door open for. I didn't say it had to stop there. And look where we ended up here. We came right up into the neckline. So right now, if the bears can push it through this support level here at the 28.64, I'm anticipating that we could see a move come down to the 28.50, possibly even a little bit lower. Now, if I'm going to be wrong on this, I'm going to be wrong because we're going up, and they're not going to give any of the people that were extremely bullish up here got washed out. And if normal psychology in trading is that when you get washed out and you capitulate and lost a lot of money being long as we came down here, and you're not going to look to get long again. Your mental state is going to be, where do I short? And I read that everywhere as far as when we got this bounce, it's going to be a dead cat bounce short here. And people did, and look what the market did, and made them look like they were right. And now all of a sudden we're back up here again, and all the people that were bullish up here and then got bearish down here are going to get bullish once we take out the 2900. And guess what? We're going to be running right into the kill zone, and they're going to get trapped again. That's why knowing when these dates are going to be very important, but also knowing when we were short up here, that when we got the 1% bullish sentiment reading, we held support. You weren't going to look for a home run trade because we're not in that kill zone time period. So you step aside, and if we take this out, there's a possibility I may go long, and that's why I'm saying with this 100-point S&P guarantee, once we get into a trade, whether it's up or down, that offer is off the table, because we can't have people coming in halfway and saying I didn't make 100 points. So it's important that if you're going to take advantage of it, whether it be for the year or just the 3 months, that you get in before we make our first trade. Now, if we don't make our trade here, then the offer's still going to be open. But the way I'm looking at things, if these support levels hold, there's a chance I'm gonna jump on the long side, because I still believe that these gaps are going to get filled. So if we can jump on a quick long trade, put a stop fairly below, not that far below it, we have a chance of making 100 points on the upside, and that's not even the actual move that this offer is made for, because the kill zone is going to be the big drop. Because once that happens, this is the type of move that we're anticipating, and it's going to be in a very, very fast manner. So right now, the bulls, it's a fairly simple thing. The bulls need to get above the 28.91, more importantly the 2900. If they do that, then they're just going to make the bears suffer that we're shorting this rally, and probably bring it up into this level. But it will probably be in a zigzag area, the frame. And if the bears can push it through the 28.50, then I'm anticipating that we could get a little scared down to the 28.24. Now, if they decide to come down and take these lows out, that's fine. Like I've been telling members, I'm 100% neutral bias right now. Whether the market goes up or down, I'm fine with it. We're just going to wait for our next trade setup. And really, when we get into that kill zone and possibly the black hole, then that's going to be when the real money's made. So with that, have a great night, and I will talk to you guys at our next update.